Good morning, everyone. It is Friday. It is Friday, May 21st. This is Nadex Morning Analysis. I'm Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. Brian and I are going to talk about a couple of potential hotspots in the markets today. Before we jump over there, I do need to share this disclaimer that trading involves risk and might not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please don't construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what are we going to talk about today? U.S. equity markets are inching up a bit, so we're looking to try to open in the green. We're going to take a look at the S&P 500, take a look at some technical levels there. In fact, I've got the chart up there. I'm going to flip it over to Brian in a second. But do realize that we have the producers manufacturing index number this morning. It does move markets, so PMI to get a glimpse at how the economic recovery is coming from a producer standpoint. 9:45 a.m. this morning. Going to have to keep our eyes on that. The other thing that we're seeing move again is gold. We're seeing gold continue to do its incremental climb higher. So let me flip this over to Brian, and
Sure.
Let's take a look at ES and gold. And if we wanted to, we could maybe on the way out try to maybe take a peek at oil, because I know that there's
there's been some movement. So
yeah,
this was the kind of crazy morning for all the flash manufacturing and services PMI, and for the most part, everything was in the green, better than expected. There's a few, like German flash manufacturing was down a little bit less. Flash services in the PMI in flash services was lower, but like the manufacturing PMI in the pound was much greater. 60 was expected, 66 is what it came in, and then at 8:30 this morning, that core retail sales number just hammered it. And again, this is one of those things, the forecast is much different, but if you look at the reaction, it was all European-based moves. So, I mentioned it, seeing this come in much higher than expected. The market moved it from the European session till now, so there's not much more of a trade now. But again, it just further reiterates the fact that we've been very, very pound strong and very CAD strong this week, and the numbers are continuing to back it up. As well as we've seen some other information out. Where is it down here? Right here, that private sector, the UK private sector signals forecast output growth for more than 2 decades. So fastest growth in 2 decades. So same trend all week for that one. Now, as far as where we are in the U.S. markets, so far, we don't have any news yet today, but we do have the manufacturing at 9:45. It's expected to be slightly lower than what it was previously. And when you look at some of the manufacturing numbers above from the European Union, you can see that manufacturing PMI was slightly higher here. Germany was less, and again, Germany versus France. This is one of the big, manufacturing groups. So this was less, and again, that could potentially foreshadow what we have in the U.S. market. Euro as a whole, basically flat, dead on, and then the pound obviously up. Pound situation is a bit different than ours. Theirs is the fastest ever. Ours is not necessarily there yet. So it's kind of setting up pretty interesting for the day. Let me go up to the ES chart here. So this is kind of the scenario we had yesterday. And you can see yesterday morning is really where we had that really just amazing push higher. But by noon, we more or less flattened out. And then we've really just kind of stayed in that same area. European session really had nothing. Now, it is Friday. We do mention Feel Good Fridays. Now, this is not an official phenomenon. If you look up, and I did the search. If you guys look at it, I'll bring it in so you guys can see it. I did the official search, right? I don't know if you guys can see this. I typed in Feel Good Friday Investopedia, and you can see there's no such thing. There's triple witching, there's quadruple witching, but there's no such thing as Feel Good Friday. Officially, it's an unofficial type thing here. So, could we have that Feel Good Friday? Sure, we could. Typically, that is after a beaten up week or when we have a lot of positive news. We don't actually have a lot of news today, and yesterday was such a run up, and there hasn't really been a lot of profit taking. One of the things we talked about was, if we were able to break through this level right around the 4150, pushing up into this 4178. The last time it's there, actually the 2 previous times that it's been there, you can see there's the basing level. It got turned away very fast and got turned away again, and we're kind of close. If I extend it across, you can see we're pretty close to it. There are 2 levels. The one above it is untested as well. So, on a purely technical basis, Oops, not this one. On a purely technical basis, you got to look at this and say, hey, are we set up for a short today? And the answer is probably, if this is any other day of the week, I would say, hey, yeah, it's looking like it. And again, it's not a crystal ball. It's the last time we were here, the last two times we were here, it barely made any progress into here, right above the 4180, and got hammered right back down again. So big push up. This is a parabolic move, right? This is a, when you look at this is a move that's, I mean, it's bigger candles, bigger move, no pullbacks, nothing. It is set for a parabolic retracement type move. So again, will it go higher? I don't have a crystal ball, but in everything in trading, you got to make sure you establish a good risk to reward ratio based trade based off of your rules. And it's not that every trade, there's no such thing as a 100% bulletproof strategy. You have to be willing to take risks. You have to be willing to take that loss. And on a purely technical basis, barring the fact that it is Friday, if this is any other day of the week, you'd be looking to take this one short based off of what we've seen previously after a big push up in price. And the risk on it is rather small. I mean, if we throw the short position out here saying, hey, we're going to, and again, maybe you like the higher one just to get a little bit extra kind of confirmation, but you could potentially miss it. There's your 1 to 3. And all it would do is take a little bit of a touchdown. And what does it do? It brings us right back into kind of this area right here of basing where, again, it's tested. Right. Here's a little bit of basing and a touch here. So could it go 1 to 3 down? Sure. Could we get a horrible, could we get like a horrible manufacturing and potentially end up down over here? Sure, we could do one of those too. So again, everything you do is based off of risk versus reward. There's no gut feeling is not a trading strategy, even though you feel like it works. I mean, remember, the market is out there to psychologically trap you. Everything that it does is to psychologically trap you. So if you base it purely on a thoughtless kind of, or emotionless, I guess, kind of trade entry, I would say there's probably something up here that you could take. I mean, 41.7950 or 41.9650 if we're able to punch through from the open. Because like I said, there's probably going to be something at the open,
Yeah. I'm just bringing it up on the Nadex charts, and a way to play this would be in the binary options. So just check these out as once we get through the open, and just remember we do have that PMI number at 9:45 Eastern this morning. So with that, again, that could be a catalyst. It has been in the past for it to break out and do something crazy. So you definitely have your eyeballs on the screen and ready around 9:45 and see how the market starts reacting. And if it starts trending, as the saying goes, the trend is your friend. Go with it. All right, Brian. One other thing we were going to talk about. I mean, that's a bit on the ES.
One more thing too. One more thing as well. And again, remember, when we think reversals, you should always jump over and check the knockouts to see where they're at. There's actually a knockout sitting here at 41.85. So if we continue to push up at the open and we kind of start basing around in here and we have not broken through this knockout, again, some of you that like knockouts or know how to use them, it may be something to look at.
I'm actually going to just let's bring that up real quickly. I just got to give me a second to get over there, navigate over.
Come on, Todd. No, just kidding.
God, you're so slow this morning. Right. So there are, take a look at the knockouts that are in here.
Yeah, that one's probably a little bit low. Like I said, right, that would be the 41.75. I think that one's a little bit at risk, but the 41.85, we're talking about an entry at 41.79. That's talking about a little, what? Yeah. Six points.
Right. So $60. So yeah. Right. So if it's up in here and you wanted to take the knockout trade, that's one thing to be, to potentially look at. Again, when it's up here, the risk if 41.85 were touched, which it has. I mean, that's the level where it's definitely. Actually, no, 41.85 is above. I mean, you definitely
it's above, yeah. So it gives you a little bit of a buffer.
It gives you a little bit of a breathing room.
Yeah, so you want to have it above, because if you don't, then it gets stopped. And again, remember, guys, this is not a trade recommendation. We're just throwing out different options and ways to play things out there. And remember, whenever you see a level like this where they're thinking reversal, you can go knockouts, you can go call spreads. I didn't have those up there.
Yeah.
But
I'm actually bringing up the call spreads right now. And the thing is with the call spreads, you're not knocked out. I just got to go through the different levels. You're not knocked out if it touches the upper boundary, but
there's a
going to be a premium in there.
Yeah, there's a 41.85, the 8 a.m. to 4:15. So here's one of those situations you have a ceiling in both. The 41.85 is in a call spread. There's a 41.85 in the knockout.
Yeah.
And the only difference between the two is one of them has that kind of stop loss included. One of them doesn't. One will take
And
you out of the position, one won't. So, if we get up into that area from the open, say we get an initial burst and then we have that news coming out, that could be a potential reversal. If you want to take it with a call spread, it does protect you against any type of whipsaw and gives you the option to be right later on the day. So, yeah, there's a little bit more premium, but you're buying that time protection that you don't have inside of the knockouts. So,
great education for today on call spreads and knockouts versus the binary options. But again, all of them are limited risk, limited reward. You know what you're getting into before you get there. All right, let's go ahead and punch it over to gold, just because I think gold's been ratcheting higher yet again.
Yeah. And remember, this is what we talked about earlier in the week when we said do your homework, know where these things are. Because if you didn't know where that was, and again, I flip it over with multiple monitors, but if you don't have that scenario, the best way to do it is just know early in the week. Throw it on whatever charting platform you have so it's out there. So when you come back and say, hey, look, there happens to be a knockout there. It speeds up your time, guys. It shouldn't take 30 minutes when you can do the work earlier in the week. So gold is, again, gold was more or less flat. We drew this where there was a breakout, and it very typical, came up, came right back to that same area again, and I'll continue it across. And we used it as a bounce. Now, we do have a little bit of a rally right now in the last, basically hour, 35 minutes, something like that. There has been some headlines, and again, the U.S. trader is stepping online. When you see data coming out of Canada, our neighbors to the north, and the retail sales are double what the expectation are, it just goes back and it just shows you that, listen, people are rolling, people are spending money, it's here. And every time they see a positive number, gold traders are going in there and putting this thing higher. But remember, every time we see this burst up, we come right back down again. Now, we do have that level up here at 1891, and I think that's something to keep our eye on. Remember, the Fed just refuses to kind of really acknowledge that this is here and that it's going to last. And, there's been a couple different reports, this morning already talking about it. But at the end of the day, is a gold trader going to be willing to take this long when, again, one piece of bad news drops us lower? I just don't know. So, again, on a technical basis, 1891, I think there's a level. Remember, this yellow box seems to be where price is getting pulled back to. And, even if we did it on kind of a smaller level, that's kind of where I would say the medium is, right? Tops and bottoms. It kind of based here, pulled up, went right at the bottom, came touched. So we've been kind of getting sucked back into this 1877 to 1869. So if we push up into these levels and we get kind of a nice little topping pattern, that would be the opportunity for a reversal. And again, manufacturing comes in bad. Remember, it is manufacturing PMI, purchasing managers index. So it is kind of a gauge somewhat of inflation as well. If it comes in negative, again, that's also one of those things. It's like, oh, maybe they're not really as much inflation, right? Because this is the cost of goods.
So so that PMI number certainly has the possibility to move both the equities markets as well as gold. So again, this morning, trying to set you up, 9:45 a.m. Eastern. So what is that? That's in an hour and 45 minutes.
No, 45 minutes.
Oh, it's in 45 minutes. How about if I do the math? I know why. Because I'm
you're
in Chicago.
Because the world operates on New York time.
You know what? I'm not the center of the universe. Seriously?
Almost the center of the United States, kind of. Not really, but kind of. Depends if you
all right, so we got 45 minutes. Keep your eye open on that. Equities opening in the green, gold punching a little bit higher. But
silver's in the same area as well.
What's that?
It is silver too, guys. Silver's in the same area. Silver has not followed past anywhere from where. And I would say, to cap off the morning, I mean, this is what, oil has looked like. Yesterday was one of those rare days where we had big movement down. And again, there was the retracement to bring it almost all the way back up. And then it was basically kind of almost a mirror. We had another big day in oil today, and it drove it straight up. Now, it is up into levels where we've seen sellers already. So again, just kind of keep that on your radar that we have a big push up. Manufacturing numbers don't look good. That could be a catalyst for us to roll back over. But again, big move up, profit taking needs to come in here at some point. So I wouldn't be surprised if we do see a little bit of a rollover. But again, with European economies closing down soon, we're going to start running out of oil sales very quick today.
So definitely also another good one because it did catch a bottom. I mean, oil's been getting hammered lately, and it finally did catch a bottom here, getting some support. Again, rolling into that PMI number. So that's really what today is going to be about: is that number in 45 minutes, and then how everyone reacts to it.
Yep.
All right. With that, any questions, please email customerservice@nadex.com. Any questions for Nadex, whether it's our products, the platform, your account. Brian is also accessible. If you'd like to reach out to him, have any questions for Brian, please email him, support@keeptradingsimple.com. With that, we're gonna, we're here. It is oil catching a bottom, gold, punching higher. U.S. equities all trying to open in the green. PMI 9:45 a.m. Eastern has that opportunity, a possibility to really make the markets move, whether they're going to continue the way they're going or reverse. But you're going to see volatility there. Have your eyes open. It's going to be a busy morning. Good luck in the markets, everyone. Brian and I will catch you on Monday.